Welcome back to the deep dive. Today, we're diving into Shopify. Um, they're basically the face of this whole online shopping explosion. You've probably seen those like really nice online stores popping up everywhere. But the real question is Shopify itself a good investment?
Great question. And by the end of this deep dive, you'll have all the info you need to answer that. We're going to cover everything. Their business model, their leadership, financials, the whole nine yards.
Perfect. Okay, so let's get started. How does Shopify even make money? It can't just be about setting up online stores, right?
Yeah, there's definitely more to it. It's a pretty smart two-pronged approach, actually. They have these things called subscription solutions, which are like recurring fees that businesses pay to use the Shopify platform. Think of it as like renting digital real estate.
Okay, so that's like the storefront.
Got it, exactly. And then they've got merchant solutions. This includes things like transaction fees, payment processing, and other cool services that help businesses run smoothly.
So it's like they're giving you the storefront, A&D, the tools to run the whole shop.
Yeah.
I'm seeing how that helps them grow so fast. More businesses means more of that sweet, stable subscription revenue, right?
Totally. Plus, their transaction fees go up as those businesses do well. It's a real growth cycle.
Makes sense. But wait, there's got to be even more to it, right?
You bet. Shopify's got some other products and services you might not have heard of. Ever heard of Shopify Capital?
Yeah, but I don't really know the details. Fill me in.
Well, it's basically a way for businesses to get funding based on, get this, their sales performance. Shopify uses data to offer funding without all the hoops of traditional loans, like credit checks and applications and all that.
It's seriously smart. It helps small businesses grow faster.
Yeah.
A&D gives Shopify another revenue stream. What else do they got?
Okay, so imagine you hate dealing with shipping and packaging, right?
Yeah, not my favorite.
Enter the Shopify Fulfillment Network. It's like a network of fulfillment centers, and they handle all the logistics of getting orders out the door.
So it's like having your own shipping department, but without the hassle.
Exactly.
No wonder so many businesses are jumping on board with Shopify. They really have everything.
Right. And to bring it all together online and in-person sales, I mean, they have Shopify POS. It's their point of sale system that lets businesses sell, well, everywhere. It's all about that seamless customer experience, whether you're online or in a store.
Okay, I'm seeing the bigger picture now. It's not just about a platform. It's a whole ecosystem for businesses to, thrive online.
You got it. Shopify's strength is that they empower entrepreneurs to navigate this crazy world of online selling.
Okay, so we got a good handle on how Shopify works as a business. Now I want to know who's driving this thing. Who's the brains behind it all?
You can't talk about Shopify without mentioning Tobias Lütke, the CEO and founder. His vision is everything to this company.
Okay, but what makes him so different? I mean, we've all heard about tech CEOs.
Well, for starters, he's totally open with shareholders. He's all about clear communication, which is refreshing. He guided them through some tough times, too. Think about the COVID-19 pandemic. Shopify did really well under his leadership.
That says a lot about his ability to, handle the unexpected. And, it's great that Shopify isn't just about profits. They seem to really care about being socially responsible, like their partnership with Operation Hope to support entrepreneurs in underserved communities. That's amazing.
Totally. It's not just about the bottom line anymore. Right.
Yeah.
And consumers are looking for that, for companies that care about more than just making money.
Right. Okay. So let's get into the nitty-gritty. What's the deal with Shopify's numbers? Those financial reports. They can be a bit much.
I hear it. Yeah. But those numbers tell a story, And with Shopify, it's a pretty exciting one. Let's start with their market capitalization. Are you ready for this? It's a whopping $150.84 billion.
Whoa, that's a lot of zeros.
That shows you how much the market values this company.
But are they still growing? Or are they just a big fish now?
Oh, they're definitely still swimming fast. Their average revenue growth over the past 5 years has been an impressive 47.20%.
That's insane growth. Okay, now about those different margins. I always get confused about gross, operating, and net margins. Break it down for me.
Okay, so each one gives you a piece of the profitability puzzle. Shopify's gross margin is at 50.93%. That means they're managing costs well, keeping a good chunk of every dollar earned before other expenses.
Makes sense. And what about operating margin?
That's a healthy 13.00%. This tells us they're effectively turning revenue into profit after considering all the costs of running the business, like marketing and administration.
All right, and finally, the big one, net margin. What's the story there?
They're at 16.84%. This is the percentage of revenue that's pure profit after all expenses are paid. It's a sign of a strong, sustainable business for sure. But there's one more number that gives us a peek into their financial strategy, their debt-to-equity ratio.
Ah, right. That tells us how much debt they're using compared to their equity. So what's Shopify's ratio?
It's a super low 0.11. This means they're not relying much on debt to finance their operations, which is a good sign for investors. It suggests a pretty conservative approach, not over-leveraging themselves.
That's reassuring to hear. Okay, last one. I promise. Free cash flow. What's that looking like for Shopify?
They've got a healthy $1.43 billion in free cash flow. This basically means they have a lot of flexibility to reinvest in the business or even return some of that money to shareholders.
So based on all these numbers, it sounds like Shopify is in a pretty good financial position.
Oh, absolutely. Their financials are solid. But of course, there are always nuances to consider, and we still haven't answered that big question. Are they overvalued? We'll dive into all that and more when we come back.
Okay, so let's shift gears a bit and talk about market sentiment. Basically, how are investors and analysts feeling about Shopify right now?
Yeah, market sentiment can be a fickle thing. It's all about perception. How the market views a company, its future, all that. It's a mix of hard data, news, and even just gut feelings. All of that can really drive those stock prices up or down.
So what's the vibe right now? Are investors feeling good about Shopify?
The overall outlook is pretty positive, I'd say. Analysts have set an average price target of $119.31, which suggests they think there's still room for growth.
Okay, that's encouraging. But sentiment can change quickly, right? What kind of news has been impacting how investors feel about Shopify lately?
Well, their Q3 2024 earnings report was a smash hit. They blew past revenue and profit forecasts, which sent their stock price soaring. It's a great example of how exceeding expectations can boost investor confidence.
Right, all about showing that you can deliver.
Yeah.
What about those strategic partnerships we've been hearing about? Are those having an impact?
Absolutely. The YouTube shopping collaboration is a brilliant move. It basically integrates shopping right into video content, which opens up a huge new audience for Shopify merchants.
Yeah, that's smart, tapping into that massive YouTube user base. And then there's their expanded partnership with PayPal, which makes the checkout process super easy.
Exactly. These kinds of partnerships show that Shopify is proactive, always thinking ahead, finding new ways to grow and add value for their merchants.
It's impressive for sure, but it can't all be sunshine and roses, right? What are some of the things that might be, holding investors back a bit?
Well, some investors are a little concerned about the slowing revenue growth compared to those, crazy pandemic-era numbers. Remember, online shopping went through the roof during lockdowns. It's only natural for things to level out as we get back to normal.
Yeah, that makes sense. It's all about finding a sustainable growth rate, right?
Yeah.
And then there's always the competition to worry about.
Oh, for sure. No company operates in a vacuum. And the big players, like Amazon, are a constant force to be reckoned with.
It's interesting to see how Shopify is trying to set itself apart. They seem to be laser focused on those smaller and medium-sized businesses, giving them the tools to compete.
Definitely. They're building a loyal following of merchants who really value that ease of use, flexibility, and support that Shopify offers.
Okay, so speaking of investors, I've heard this term short interest thrown around a lot. What exactly does that mean in relation to Shopify?
Short interest is basically a way to gauge how many investors are betting against a stock. They borrow shares, sell them high, and hope the price goes down so they can buy them back low and pocket the difference.
So it's like a lack of confidence in the company's future. Is there a lot of short interest in Shopify?
It has gone up a bit recently, which might make some people nervous, but overall the ratio is still pretty low. I wouldn't say it's a major red flag at this point.
So something to keep an eye on, but not necessarily panic about.
Yeah.
Okay, so to wrap up this whole market sentiment thing, what's the main takeaway for our listeners?
I'd say it's a mixed bag, which is pretty typical for any dynamic company. There's a lot of excitement about Shopify's potential for sure, but there are also some valid concerns.
It seems like the key is to be cautiously optimistic, right? Do your research and don't just blindly follow the hype. Okay, so let's move on to ownership. Who actually owns Shopify?
This is important for investors to understand. It gives you insight into who has the power, how decisions are made, all that.
Okay, so who are the main players in Shopify's ownership structure?
Well, a big chunk of Shopify is owned by those big institutional investors, like mutual funds, hedge funds, pension funds. Their stake in the company shows they have confidence in Shopify's long-term potential.
That's a good sign, right? It means those institutions have done their homework.
Right. What about insider ownership, though? Like, how much do the executives and board members own?
Yeah, what's the story there?
That's where things get interesting. Insider ownership is relatively low overall, but there's a twist.
Ooh, twist. I'm listening.
Tobias Lütke, the CEO, he actually has a special class of shares that gives him a lot of voting power, even though he doesn't own a huge percentage of the total shares.
So he still has a big say in how things are run. Doesn't that raise concerns about, like, too much power in one person's hands?
It's a fair point. Founder-led companies can be super innovative, but sometimes having too much control can lead to problems.
Right. It's all about balance.
Exactly. And Shopify seems to be aware of that. They actually created a special founder share for Lütke a while back. It's designed to balance his leadership with the need for like strong corporate governance and making sure shareholder rights are protected.
So it's like giving him extra voting power, but with some safeguards in place.
Exactly. It's a way to hold him accountable while still letting his vision guide the company.
Okay, that makes sense. So we've got these institutional investors, insiders, and of course, regular people like us who can buy shares of Shopify. But how is the company actually governed to protect those shareholder interests?
That's where their corporate governance structure comes in. They have a board of directors that's responsible for overseeing management, making big decisions, and like making sure the company is acting in the best interests of all shareholders, not just a select few.
So it's a system of checks and balances.
Exactly. They also have different committees within the board that focus on specific things like audits, compensation, to make sure everything is running smoothly.
Okay, it sounds like they're taking corporate governance seriously, which is good to hear.
Mhm.
Now let's talk about risk. Every investment has some level of risk, right?
Mhm.
So what are some of the potential challenges or pitfalls that Shopify might face?
A good way to think about this is through a SWOT analysis. It stands for strengths, weaknesses, opportunities, and threats. It's like a big picture snapshot of the company.
Okay, I like that. So let's start with Shopify's strengths. What are their biggest assets?
Their user-friendly platform is a huge one. It's intuitive, easy to use, even for people who aren't tech savvy. This is a major selling point for like smaller businesses or those just starting out with e-commerce.
Yeah, that easy button factor is super important. I've also heard they have a massive app ecosystem.
They do. Thousands of apps that integrate with their platform. This gives businesses a ton of flexibility to customize their stores and add features that meet their specific needs.
So it's like a giant toolbox for building your perfect online shop.
Exactly. And let's not forget their brand recognition. Shopify has become practically synonymous with e-commerce. People know and trust the name.
Yeah, you see that powered by Shopify badge everywhere now.
Right. And those network effects we talked about earlier, those are definitely a strength. The more merchants join Shopify, the more attractive it becomes to customers because there are more options. And that, in turn, makes it even more attractive to merchants.
It's a beautiful cycle.
Yeah.
And once a merchant has built their store on Shopify, it's not easy for them to just switch to a competitor, right?
Nope. Switching platforms is a big hassle. You have to rebuild your entire store, move all your data. It's a pain.
So Shopify has a built-in advantage there just by virtue of being the platform that people are already using.
Exactly. And their experience management team is another big plus. Ludic has proven himself to be a strong leader.
Okay, but no company is perfect. What are some of Shopify's weaknesses? What should investors be aware of?
Well, that huge app ecosystem we were just praising, it's also a bit of a weakness. It means Shopify relies on a lot of third-party developers. If an important app goes down or a developer stops supporting it, it can cause major problems for merchants.
Ah, so it's a double-edged sword.
Yeah.
You get all that flexibility and customization, but you're also dependent on those outside developers.
Right. Another weakness is that the lower price plans don't offer as much customization. Businesses on a tight budget might not have all the control they want over the design and features of their online store.
Yeah, it's a trade-off between affordability and flexibility, I guess. What about their financials? Anything concerning there?
Their earnings have been a bit up and down over the years, which can make some investors uneasy.
Yeah, a little more consistency would be nice.
Yeah. And even though their profitability is good overall, they're still very much tied to the global economy, If people stop spending money, Shopify will feel the impact.
So those external factors are always a risk.
Exactly. And then there's capital allocation efficiency. Basically, how well are they using their money to grow the business? They've done a decent job so far, but there's always room for improvement.
Okay, so weaknesses noted. Now let's flip the script and talk about opportunities. What's the future looking like for Shopify?
Well, The most obvious opportunity is the continued growth of e-commerce. I mean, it's a massive, booming market.
And Shopify is right at the forefront of it.
Yeah.
But where else can they expand their reach?
There are tons of untapped markets and industries out there. They could create special platforms for specific industries, partner with local businesses and emerging economies. The possibilities are endless.
So many ways to grow. What about new products and services? They seem pretty innovative.
Oh, definitely. Think new marketing tools, analytics, better customer relationship management. There's no shortage of ideas.
I can't wait to see what they come up with next. And of course, we can't forget about those strategic partnerships and even acquisitions.
Right. Those are huge growth opportunities. The YouTube Shopping and PayPal partnerships are great examples. They could continue to team up with other companies or even buy companies that complement their existing services.
Makes sense. It's like they're always adding new pieces to their e-commerce puzzle. And what about those payment solutions they offer? Shopify Payments and Shop Pay. How are those fitting into their overall strategy?
Those are key. The more they can encourage merchants to use those integrated payment solutions, the better. It simplifies things for everyone, keeps those transaction fees low, and ultimately generates more revenue for Shopify.
So it's a win-win for both Shopify and the merchants. And speaking of making things easier, what about that whole omni-channel trend where businesses are selling both online A&D and stores? How does Shopify fit into that?
Well, that's where Shopify POS comes in. It's their way of bridging that gap between the online world and the physical store. As more businesses adopt this omnichannel approach, Shopify is in a prime position to benefit.
Okay, so we've got strengths, weaknesses, and opportunities. Now let's talk about the elephant in the room, the threats. What could potentially hurt Shopify's success?
The biggest threat, honestly, is the competition. Those e-commerce giants, especially Amazon, are tough to beat.
Yeah, it's David versus Goliath. How can Shopify compete with those behemoths?
By staying agile, constantly innovating, and sticking to what they do best, which is empowering those smaller businesses to thrive.
It's all about finding their niche and standing out. And of course, we can't forget about the economy.
Oh, right. Economic downturns can hurt any company, and Shopify is no exception. If people aren't spending money, their sales will suffer.
It's a risk that's hard to control.
Definitely. And then there's cybersecurity. A data breach could be devastating for a company like Shopify.
Yeah, that's a big one. They handle a lot of sensitive data.
Absolutely. And they need to be prepared for those ever-changing laws and regulations, too. The e-commerce world is constantly evolving, and Shopify needs to keep up with all the legal stuff.
It's a lot to juggle. And let's not forget about the risks that come with relying on all those third-party suppliers and logistics providers.
Right. Any disruptions in the supply chain can cause big problems for e-commerce businesses.
Okay, so we've covered a ton of information here. We've looked at Shopify's business model, their management, their financials, the overall sentiment around the company, their ownership structure, the risks, the opportunities. Phew.
We've done a deep dive, for sure, but the big question remains. Is Shopify overvalued? That's what we'll tackle in our final segment.
All right, we're back. So is Shopify overvalued? That's the big question we're tackling today.
It is the question, really, especially for anyone thinking about investing.
We've seen a lot of good things, that amazing platform, those smart partnerships, that impressive growth.
And their financials,
Yeah.
super solid.
But we can't ignore those weaknesses either, right? The reliance on outside apps, those economic question marks, that fierce competition.
It's a tough call. You got to weigh those risks against the potential rewards.
So, drum roll, please.
Yeah.
Well, what's the final verdict? Is Shopify overvalued?
Okay, here's the thing. Despite all the positives, and there are a lot of them, Shopify does seem to be slightly overvalued right now.
Well, okay, hold on. Before anyone freaks out, let's break that down.
It doesn't mean Shopify is a bad company. Not at all. Their future could still be very bright.
So what does it mean then?
It means the market might be a little too excited about Shopify right now.
Too much hype.
Yeah, sometimes the hype can push that stock price higher than it should be based on, their actual fundamentals.
It's like getting caught up in a bidding war and overpaying, even though you still get a great item.
Exactly.
So what's the takeaway for our listeners who might be thinking about investing in Shopify? What should they do?
Don't write them off completely, but definitely proceed with caution.
So do your research.
Absolutely. Don't just follow the crowd. Really dig into those financial statements, understand their plans for growth, and make sure you're comfortable with the level of risk.
Good advice. Investing is about finding opportunities that fit your goals
Right.
and your risk tolerance.
Exactly.
And it's a journey. a constant learning process.
Speaking of learning, if you want to learn more about Shopify or any other companies you're interested in,
Make sure you check out the Stock Analytics AI YouTube channel
we break down all this complex financial stuff in a way that's actually easy to understand.
so you can make smart decisions. And hey, remember, everything we talk about here is just for educational purposes, okay?
Oh, we're not financial advisors.
So please, don't take this as investment advice. Do your own research, talk to a professional if you need to, and make informed decisions.
Couldn't have said it better myself.
That wraps up our deep dive into Shopify. We hope you enjoyed it.
Yeah, thanks for joining us. And hey, if you have any suggestions for companies you want us to cover, leave them in the comments.
We're always on the lookout for new and exciting deep dives.
Until next time, happy investing.